Welcome to Markets Now. I'm Michelle Rook with Rich Nelson of Allendale, and grains to the plus side on Wednesday with livestock seeing mostly lower prices. Rich, let's talk about the grains. We've had a nice rally here. I know there's been some fund short covering, but it's been a little bit more than that. In fact, is the market trying to price in a little bit smaller crop or lower yield?
I would say it's trying to price in this idea that perhaps we're not going to see as large of a yield increase as was being discussed perhaps 2 or 3 weeks ago. So I think that's the point for us right now. This market had priced in a good yield increase, and also for soybeans, it did have those export sales concerns on both those issues. And keep in mind with this recent dryness turn from Midwest, maybe we're reining in some of those concerns about soybean demand, and also maybe we're reining in some of our concerns about higher yields in the months ahead.
And that is kind of what you found in your annual survey on yield, right?
It certainly is right here. Released out this week, 182.5 bushels an acre for corn. That's actually lightly under USDA's August view. The soybean numbers, 53.3 bushels an acre. That is minimally over USDA's August numbers. Those aren't really bullish stories, but they're bullish considering the fact this market had been pricing in a much larger yield discussion in prior weeks here.
So, Rich, how much did that, surprise you? Because usually big crops get bigger, don't they?
They certainly do. And this, it's example here for soybeans, perfect right now. Keep in mind when you have July to August increases for yield in soybeans, you about 70% of the time you also have another increase on the September report. So this market had been valid in thinking, hey, maybe we do have a good yield increase still ahead of us for another month still. So the market wasn't wrong. We're just simply trying to fine tune the exact number here right now.
Right. So your nationwide yield survey actually came in pretty close overall to what USDA came up with in the August WASDE. So do you think that infers we may not see many changes in September?
That's a good possibility. And I give it a 50-50 chance on whether USDA will hold yields unchanged or perhaps raise them on next week's report. I'm not quite sure we can make a definite stance on it just yet. The message from the survey, though, I think which we can agree is perhaps if we do have a yield increase ahead, maybe it won't be a sizable jump. That might be the story we could point to right now. And certainly with our discussions on corn export sales and other factors, we can also find some lightly positive other factors to discuss as well.
Yeah. Demand has been part of the equation here. It's been picking up, but how much does it have to pick up, Rich, to really start chewing through these ending stocks that we have?
Really, this is not a big story for the corn side. It's a big story for soybeans, especially with the stock number USDA gave us 560 million bushels. And the market at one point in 2 or 3 weeks ago was pricing in the belief of maybe 620, maybe even up to 650. So this export sales issue had been a very serious concern. It still is a moderate concern right now. We've got bookings for these soybean side of things, 30% under the 5-year average. USDA's goal is only a 5% cut. So we still have more work to do right now.
Yeah. China has been buying. We've seen a lot of flash sales of soybeans. Are we competitive enough with Brazil right now that we can keep that momentum going or not?
We have to keep in mind here, as far as the soybean side of things for this price side, price roughly even with Brazil here for bookings for delivery over the next 1, 2, or 3 months. They still have a light price advantage for against us for that December, January shipping time of the year. So as far as that goes, we're not quite fixed. Another thing to consider is the fact that even though the U.S. dollar index has fallen, our numbers against the Brazilian real have actually worsened against us. The real continues to depreciate against the US dollar here in the past 2 weeks.
Yeah. Corn exports, though, are running well ahead of last year, aren't they?
They certainly are. We're doing a great job on corn exports, and a little positive for us to see, we actually are the cheapest store in town right now, even cheaper than Ukraine, which a few months ago had a $40 per ton discount. So we're on a positive side. This corn export story is valid. So far, you can't really argue against it here just yet.
Yeah. What about wheat? Exports look like they're pacing a bit above last year, but are we competitive yet with the Black Sea or any of those areas?
Against Europe, who has had some recent concerns about quality as well as a light production hit, we actually are at a price advantage against Europe specifically. One positive here. We had 6 weeks in a row of surprisingly negative U.S. wheat export sales. The past 2 weeks, though, have seen a surprising turn. So, on the positive side, maybe we're done with this prior surprisingly negative argument here for the wheat side. And maybe we are now perhaps piecing together a few more sales, which weren't seen in these past few weeks.
Yeah. So, Rich, we've talked about the supply and the demand reasons why the grain markets have rallied, but how much of this has just been fund short covering here and technical buying?
It certainly has been a factor, and we have to admit that the market had accepted, quite willingly so, that fund selling in prior weeks. Also positive for this week's discussion on the chart side, we did break that long-term downtrend, which had been placed for months and months. So the charts are picking up a little bit, as well as the market's now acceptance, perhaps, of some fund short covering. You can make an argument not just on fundamentals for likely higher prices. You can also make a chart and fund discussion as well here.
Yeah. Of course, like you said, we broke the downtrend line on soybeans. Do the charts look as good for corn and wheat? I mean, it looks like we're above like 50-day moving averages, but what else did the funds need to keep buying?
I think that's the point right now. We need to continue to see not just this market acceptance of lightly changing fundamentals, which have been seen right now, but we also need to see this chart perspective hold as well. We need to get past these highs from roughly about 1 month ago, which on all these markets are just a few cents higher from here, and we need to see further acceptance. So for right now, I think that's a story which is still working for us, at least in the short term here.
So, what's your opinion, Rich, of how much upside we have left here in the grains?
As far as the corn side, you can make a better story on this one. If you have only a 2.0, 2.1 billion bushel stock, you could probably argue the corn market perhaps another 30 to 40 cents higher from here, getting in that 440 to 450 range. For the soybean side, you can maybe make some limited upside discussions, perhaps another 20 to 30 cents higher from here. Keep in mind, the soybean discussion is not quite as fixed as well as the corn side here.
Gotcha. Cattle market mostly lower on Wednesday. So, have we run up into chart resistance or was it cash trade news, lower cash trade?
Yeah, we do have some word here of perhaps some 182 selling in Kansas. Last week they sold for, or, I'm sorry, 180 sold in Kansas. Last week was 182, 183. So that's a discussion. So far, cash cattle is confirming what futures have been implying. Futures still imply cash will eventually drop in the South to 178 by the time we get into October. So market so far is seeing acceptance of this lower cash cattle trend here.
Yeah. And it's too bad because boxes actually been hired the last day or two, which maybe inferred some pretty good holiday clearance.
And that's exactly right here. So far, even though we've had some concerns about this story of a declining U.S. economy, we really haven't seen the U.S. consumer really push back on retail-based beef demand. It hasn't happened yet. In fact, wholesale beef right now, even with our recent downtrend, is kind of matching last year's discussion. We're only 1% below last year's pricing for wholesale beef. So this is still a market holding some quite strong demand discussions, which we're all waiting and wondering if we will see some consumer pushback in the coming weeks.
No doubt. What about the hog market? We've had a nice chart breakout. I think October is like at 3 month highs. Has it been all managed money coming in here to buy, or are we getting a demand push?
And that's an interesting question, especially on the hog side. We have some things going on at this time of year which we have to discuss. Usually, early September is a time frame for procurement for October's National Pork Month, and usually this gives us about another 2 weeks of higher trade on the future side. So you can make an argument that there is some type of light fundamental based reason for this rally, but I do think this market certainly has got a little excited. So far, it's not yet finding a rejection point of this higher price discussion, though. So while I think it might be a little overvalued, perhaps right now, it's still showing some consistent strength right now.
All right. Thanks for joining us. Rich Nelson with Allendale. That is Markets Now.